G'day guys, welcome back to another natural gas update. Now the charts have dropped further since our last update. We're going to include some back testing, show you some trading strategies. Also, before you go any further, make sure you hit that like and subscribe button to support the channel. That'll be greatly appreciated. We also put out the +1 video, so that's a bit of a deeper dive into some of the strategies we cover. So make sure you reference those, and some of those links are in the description below. In terms of the outlook, as of today, July 31st, demand and supply balance tightens. Global gas demand rose roughly 2.7 to 2.8% in 2024, led by emerging markets, though growth is expected to slow through 2025 amid economic headwinds. US production remains high, feeding strong export pipelines, example LNG, while Europe's storage and pipeline vulnerabilities tighten supply. Russia-Europe pipeline dynamics. Russian pipeline gas via Ukraine halted on January 1st, 2025, forcing European demand toward LNG from the US, Qatar, Africa and others, accelerating diversification efforts. Turkstream now effectively channels remaining Russian export capacity to Europe, although under increased risk of disruption and scrutiny. Middle East choke points, tensions. Iran's June 2025 threat to close the Strait of Hormuz, through which roughly 20% of global LNG and oil flows, stoke risk premiums across energy markets. A closure, even briefly, could trigger sharp natural gas and oil price spikes. US-EU energy trade politics. A new $750 billion US-EU energy agreement, if realised, could substantially boost US LNG exports, but analysts warn the target may be unrealistic and increased supply could cap price upside. Geopolitical risk premium elevated. Rising tensions in the Middle East corridors and uncertainty over sanctions regimes, example Russia and Iran, continue to add volatility to gas markets and support short-term bullish outlooks. Ongoing trade disputes and investment delays, such as fewer LNG project FIDs in 2025 and underlying supply constraints. So looking at the natural gas price first off and long-term trends on the monthly, it has been bullish above the moving averages of the price chart. Likewise on the CCI, notice it was above, but now it's pulled back with that bearish candle so far this month. And that CCI has dropped into that moving average range. So at the moment, neutral positioning on the monthly. On the weekly, it's showing a bearish trend. Is broken below the moving average of the price as well as the CCI moving averages. Now these moving averages, by the way, for those new to the channel, are attached in the description below for that video if you want to learn how to draw them on your charts. Also notice we've got on the monthly and the weekly, we've got these fair value gaps down here, and not definitely, but very likely the price will come back towards that range, possibly. They're unfilled orders in the past. They could take some time to play out, so don't go placing short orders based on those alone. We use the moving averages in terms of direction to trade. So again, if you're trading on the daily, go in the direction of the weekly in this case. On the daily, we've got bearish momentum. You can see there those fair value gaps. This one's been penetrated, and so is this one back here. This one up here is a bit of hasn't been touched yet, so you might see a bounce in the near term into that area. But at the moment, we follow the moving average trends. Both the price and the CCI are still trending down. So if you're trading on the 1 hour time frame, go in the direction of the daily. Looking at the 1 hour time frame, what we look for is any divergence. By the way, there was no divergence on the higher time frames that I noticed, but on the 1 hour, what we're looking for is any divergence. And at the moment, you can see there if you had been going short, you would have taken that short entry back there on that candle when the CCI and the price were low, and you'd be still holding on to that trade, waiting for that CCI to break into that moving average range to close out your trades. At the moment, looking good. Don't wait for the price to break into the moving average because you'll lose some points of profitability if you wait for that. The CCI gives you an earlier warning exit. But at the moment, also notice we've got these fair value gaps above here. Prices haven't retraced into that area, so you might see price movement to the upside in the near term. Again, I don't trade on those directly. I trade in the direction of the moving averages. I'm just giving you an idea as to where the price may retrace to. You can see back here with these fair value gaps, they've all been filled by the subsequent candles afterwards. Now, if we go to the back test, what I've done, I've started the back test here around about the 24th of June, when the price broke below the moving average on the price as well as the CCI. It's where you would have started going short. Now, and just follow the short trades down here. This is the stop loss approach, and this is the average down approach. Now, I'm not telling you to let it run through the whole period. What you do is at the very latest, you get out of the trade back here when the CCI broke into that moving average range on the daily. Notice how on the daily you would have got out near the bottom there on that range, rather than waiting for the price to break into that moving average on the moving averages. You would have lost some profitability on that point there. But also notice as you let it run at that point there, that equates to this area back here on the 1 hour time period. So what we look for here is any divergence, and if there's no divergence back here, for instance, as I said, which equates to this area, you would have got out at the very latest when the price broke into that above that moving average range, and those moving averages started curving up. Sometimes you've got to zoom out a bit and to see those moving averages start moving to the upside, and that would have been an early warning to get out of that trade in that point there. So you would have avoided that drawdown. Going back here, likewise, you would have avoided that drawdown had you got out of the trade. You would have gone short and maybe got out when a price broke into that moving average range. At that point there, you would have got out with a small gain there as well. So again, you would have avoided that drawdown there as well as there. Notice back here on the 1 hour time period, there was a bearish divergence, and you would have, in line with the daily momentum, you would have then taken a short position at that point and started going short there as well. Then you would have noticed this bullish divergence, higher lows versus lower lows on the price. Again, you would have got out of the trade at that point once the price started moving sideways in this case, standing clear until the price and the moving averages started bending down and going short there again, and then again closing it out when the moving averages started curving up. So you might have had a small gain there or even a small loss depending on your stop loss approach, then going short again there. And now again, as I said, you would have gone short on that candle and you'd still be in the trade with the CCI or the price, but wait for the CCI to touch that moving average range to exit your trades. So BOIL on the monthly is still bearish below the moving averages and still dropping. Again, notice very long-term play. There's no CCI for the monthly. On the weekly, we've got a bearish movement as well below the moving averages of the price, and the CCI starting to curve down as well, so giving us a bearish momentum. We did have a bullish divergence back here, a very long-term play, started back in 2023. Again, notice those fair value gaps. So again, they're a long-term play for the price maybe going up in that area in the long term. On the daily, it's actually broken through this resistance we had previously at 35.98, so I'm going to remove that, as currently there's no other resistance at the moment. So I'm going to remove that, and at the moment, still dropping, both the CCI and the price still dropping below the moving averages, giving us bearish momentum. But again, notice there's been a couple of fair value gaps there, which again we may see a move to the upside in the near term sometime possibly. Looking on the 1 hour time period, again directly going in the direction of the daily. Here we've got a lower prices here below the moving averages, but notice the CCI is giving us a bullish divergence. So whenever you see higher lows on the CCI versus the same period lower lows on the price, that's a bullish divergence, which means the price may retrace to the upside. And if I was to draw a retrace target there, assuming it keeps rising from there, of course it could keep going further. I don't trade these, I just look at it as a potential area of resistance if the price does retrace. And we look at it going to the 23-38% range as a minimum. Could go a lot higher, but that's a minimum retrace, and that also coincides with this fair value gap as well. So you might see the price retrace back to that area at some point. But at the moment, predominantly taking short trades, and if that CCI still breaks and is currently in that moving average range, if it breaks to the downside, I'd open up another short position. But at the moment, if you're trading on the hourly, you'd be if you're wide, you would have been closing out your positions on that candle at the moment. So again, got to watch this very carefully to make sure you don't get caught out with any sudden upside moves. For KOLD on the monthly, still bearish, but notice we had a few months now, it's very small bullish movements up to upside. There's no CCI for it, but I would still call that a bearish momentum at the moment. On the weekly, broken above the moving averages, both the CCI and the price. So bullish momentum. So if you're going trading on the daily, take long trades only based on the weekly. What I'm looking for as well is any bullish divergence, and or any bearish divergence, and I can't see any there. And on the daily, again, bullish momentum at the moment on the daily. So if you're trading on the 1 hour, go long only. We've had a few gaps there in that range. So again, we might see a bit of a pullback to cover those fair value gaps that are identified in those gap ups. There's no divergence as well that I can see. There was a bullish divergence back here versus lower lows on the price, and that showed with that price move to the upside in those few days. Going to the 1 hour time period, again, what we look for on the 1 hour, if you're trading on the daily, we'll go in the direction of the daily. But if you're trading on the 1 hour, notice here we've got the lower highs on the CCI versus the same period higher highs on the price. That's a bearish divergence, which means we may see the price pull back. That was after a bullish divergence back here on the 1 hour, lower lows there versus higher lows there. Now, in terms of a pullback here, assuming it starts pulling back, of course, the price could still keep rising. We're going to expect a pullback in this range between the 23 and 38 as a minimum. Of course, it could go a lot further to the downside, but that'll be a minimum. It could just touch that and bounce further to the upside, or it could actually keep falling. That's why I always follow the movements above and below these moving averages, just to make sure we keep a track of it. At the moment, predominantly bullish movements. Don't go short based on that. We predominantly, if you're trading on the hourly, we go long, showing it in the direction of the daily, because most of the momentum is in that direction. For UNG on the monthly, that's also bearish below the moving averages. Again, notice those very long-term fair value gaps, so we might see that. Again, that could take years to play out. Don't go placing long orders based on that. So the price is bearish below the moving averages, but notice the CCI is broken into that moving average range, giving us a bearish momentum as well. It was bullish previously, but currently it's neutral, and it's more bearish than neutral, I'd say, at the moment. So just be cautious of any long trades. On the weekly, that's bearish very decisively at the moment. On the weekly, both price and CCI below the moving averages. And what I'm looking for is any divergence. You see there was a bullish divergence back there. That played out. We had a bit of a price spike to the upside there. Didn't go too far, but that was in play in terms of that bullish divergence. Again, another fair value gap up there, longer term. Don't go trading based on that. And on the daily, we've got bearish momentum below the price and the CCI, so still both trending very strongly to the downside. We've got a little fair value gap there, but again, don't go trading based on that. We go in a direction of the moving averages there on both the CCI and the price. Going to the 1 hour period, we'll look for any micro moves, and similarly here you can see we've got another bullish divergence versus the price, lower lows versus higher lows. And again, to draw a target range on that, again, don't go placing trades on this. This is just purely an area of resistance, possibly as a minimum, somewhere in that range between 23 and 38%. We expect the price to touch. More than 90% of the time it touches this 23-38% range. You could actually just touch it and break further to the downside, or it could actually break a lot higher. We can't tell from here. We only go by probabilities. So at the moment, going predominantly short, again, wait for the CCI to break below to take any short entries. Ideally, I'd like to see that invalidate the divergence and break a lot lower than that point there. So at the moment, predominantly short trades to be taken. Remember to have a deeper dive into some of our strategies. Reference the links in the description below. They're the +1 videos. So hit that like and subscribe button to support the channel, and we'll speak to you in our next video.